Very welcome and thank you much for joining us. Our agenda today is going to kick off with the summary of the Company House reforms, long awaited, and followed by a very interesting title, London, the Centre for Money Laundering, which I'm sure some of you have seen that recently in the news. And then we'll do a Q&A at the end. So pleased to have with us today Nigel Dickinson from Head of Partnerships from Graydon, and Darren Hodder, the Director at Little Gratty. And for those of you who don't know me, my name is Laurie Beagle, and I'm Managing Director at Forums International Limited. So, okay, so some of you will have heard me say probably on many occasions, I've always described fraud as the fastest growing industry. Well, on the BBC last week, a commentator said the fastest growing crime in the UK is fraud, totaling £50 billion a year. Now, whether that number is good or bad, I have a feeling that that's probably on the low side. He went on to say that an industry success story this is an industry success story that perhaps no politician will celebrate. So I thought a little chuckle after that. So also, there's been a lot of types of fraud in the news recently. So I just thought I'd list those. And of course, COVID-19 been going on for 7 or 8 months now, and we're seeing furlough fraud. The coronavirus is being linked to fraud against charities. In fact, if those of you are members of the Fraud Advisory Council, they're doing a charity fraud awareness week in November. Student fraud, bounce back loan fraud, lottery scratch card fraud, that's an interesting one, gambling fraud, and a sad one, I think, Grenfell Tower fraudulent claims. So I was surprised to see that on the list. And property fraud. And bringing up the list, the reports of an increasing number of cases involving the elderly and people who actually get caught out by these fraudsters. David Clark, who's the chair of the board at the Fraud Advisory Council, said recently the fraud market has undergone a transformation. They, the fraudsters, are moving into an area that was once occupied by the grey suits in the city. They've got the opportunity to make some sort of money that they would never have done so by dealing heroin. So that is quite a frightening statement, I think. Right, okay, so if you're ready, we're now going to move on, and I'd like to introduce Nigel Dickinson. I think we're going to see his face, and he's going to take us through the reflections on the Company's House consultation document, which is, for those who haven't read it, it's 97 pages long. Nigel is not going to be covering all 97 pages today, so but he'll be the overview. So Nigel, over to you.
Thank you very much, Laurie. You're quite right. I won't be going through all 97 pages, but I have read all 97 pages on more than one occasion as part of the interaction that Graydon is having with the Company's House Association, and also that our trade association, BIPA, is having with Company's House. So I want to take this opportunity to just share some reflections on where we are with the Company's House consultation, what it means for our industry, and specifically what it means for the fight against corporate fraud. I'm just trying to advance the slide. I think it's just taking a moment to catch up. There we go. Okay, so I'll spend just a few moments talking through the background to the reform process that is going on with Company's House, some of the drivers behind that, where we are in the process, and then there are a few key things. There's an awful lot in the documentation and in the report, but I'm just going to pick out 5 key items which I think are worth sharing, and I'll share my thoughts, both personal, some from Graydon and some from BIPA, and then draw some conclusions together. So the background to the reform, many of you, if not all of you on the call, will know that Companies House has been around for an awful long time. Established in 1844, Companies House really embodied the trade-off between the benefits of being a limited liability company, the enormous benefits that represents, as the owner's liability is limited to the amount of money they've invested in the company, and should it go bust, then they're not liable for any debts over and above what they've invested. An enormous privilege. And the trade-off for that, of course, is the fact they are required to follow certain rules in setting up a limited company, the way it's formed, the way it's regulated, and the amount of data they put into the public domain about the ownership and the trading performance of those companies. So that's the essential trade-off that Companies House embodies. It was set up to be the register of all that information that is put into the public domain. And according to the consultation, that data is now accessed 9.4 billion times a year. Quite a staggering number. And Companies House commissioned some research amongst major users last year and arrived at the figure that they thought the usage was worth between £1 and £3 billion to the UK economy. So this helps them to strengthen their case, of course, into the reforms they want to push ahead with. And the need for reform, for those of you who are regular attendees of Fraud Prevention Network, you will be familiar with some of the issues that we raise on a fairly regular basis with Companies House, the way it's constituted, and the way it can be taken advantage of by criminals and fraudsters. Companies House, since it was formed, has essentially been a filing cabinet for all of the information that is required to be put into the public domain. It has had little to no power to actually challenge the information or to take action against companies that are filing incorrect information, or to validate the information that's being filed at all. And that's no reflection on the people at Companies House. It is simply a reflection of the way the register was constituted in the first place. And increasingly in recent years, that position of being a filing cabinet has become increasingly obvious that it was requiring of some reform. In recent years, most of the changes at Companies House have focused on supporting entrepreneurialism and removing regulations and regulatory burden to make life easier for the businesses that register and file information. The idea being, of course, that this would help the economy, take red tape away from directors and owners of businesses, and generally allow them to concentrate more on doing the things they needed to do to grow their businesses rather than be swamped in bureaucracy. So there's been a trend of removing regulation and making less information available for the last few years. And perhaps the most obvious example of that has been the Companies Direct venture, which allows companies to be formed online. And as part of Companies Direct Online, very many of the validations that were required to prove an individual was who he was were dispensed with, which led to the very strange situation that if you filed or registered a company through a registration agent, they were required to prove the identity of the individuals. But if you did it yourself via Companies House Direct, then no such requirement was in place. So because of that in particular, and other similar themes, Companies House has increasingly been seen as a way of laundering money internationally by setting up shell companies with limited information about the owners and the connections. And even domestically, the increasing rise of Phoenix companies and long-firm and short-firm fraud are all called out in the introduction to the consultation as issues that the consultation is looking to address. And Lord Callanan, who is the minister with responsibility for this whole process, is very much tying that in. The reforms will support my ambition of making the UK the best place in the world to start and grow a business. The current state of play is the consultation was published in May 2019. This is a direct quote. The consultation prompted a valuable debate and received 1,320 formal, unique responses. Some of the respondees are named at the back of the consultation, and they include pretty much every trade organisation that you could think of that has some sort of direct or indirect relationship with either using the data or filing data or registering companies. All the big law firms, all the big accountants, the credit reference agencies, other large users are all represented in the respondees. And since we published, again, this is a quote, the government has also published a 3-year economic crime plan. So this is very much tying together the Companies House reform with the government's battle against economic crime, i.e. money laundering and fraud, which some of us would say was somewhat overdue, but is to be welcomed. So there are 4 key items that I wanted to just talk through, which are recommended to be taken forward through the consultation. And then I've got just a 5th catch-all of a few other things just worth drawing to everyone's attention, I think. So the headline reform is the need for, or the requirement for ID checks on directors. Also some reforms on shareholders' information, the right to query information, and engagement with credit reference agencies, which we at Graydon and in the industry see as very positive. So on ID checks, for the first time, the government will introduce compulsory identity verification for all directors and people of significant control of UK registered companies. This is a massive step forward as far as we're concerned at Graydon and in the industry that we represent. You will have seen, if you've attended previous FPN meetings, many examples that we've come across of companies that have been set up to commit fraud with bogus individuals as their directors. So we've seen examples of hundreds of companies being set up by the same individual, who in fact is a 2-year-old girl. We've seen companies set up with Donald Duck and Mickey Mouse and all sorts of evidently bogus names, sometimes just for the sake of proving that it can be done. And more importantly, of course, this is a loophole that has been taken advantage of increasingly over the years by the fraudsters. There is some discussion about how this is going to be done. There's no final decision on this, whether there's going to be a personal identification number or an ID check at each point that an individual interacts with Companies House. That will follow through in the consultation. But the fact that this is happening feels to us in the industry to be an enormous step forward, and in itself will wipe out a lot of fraudulent registrations taking place in the first place. I can move to shareholders information. Those of you who are regular users of Companies House will know that for the last few years, there has been a challenge of seeing the snapshot of the owners of a business, because what used to be the annual returns, the statements that once a year outlined all of the shareholders of a limited company, was done away with and replaced with a process whereby only the changes had to be filed. So if you wanted to create that snapshot, either you had to come to someone like Graydon who was doing it for you, or you had to go back to the last annual return that had been filed and then track back all of the changes, which could be quite a laborious process, which of course is prone to error. And we know at Graydon, of course, because we were having to do that ourselves to create that snapshot. So Companies House will be returning to that annual view of the owners of the company. And again, we believe this is very much to be welcomed. It makes it much more transparent who is behind a business, makes the data a lot easier to use. Some of the other things that had been put out for consultation about collecting more information on shareholders and making ID checks compulsory for shareholders were or are not being continued. It was felt that they were just too impractical, or perhaps too difficult to implement, or the burden between the regulation and the benefit was out of kilter. But nevertheless, we think that the return to an annual statement of shareholders' ownership is a very positive step forward. One of the other things I've picked out as what I believe is a major improvement and something to be applauded is the new right to query that is being given to the Registrar of Companies. So going back to the point about Companies House just being, if you like, a filing cabinet, and their requirement was just to file the information that was sent to them, this changes the game on that front quite considerably. So there is a new power given to Companies House that they can query information before they post it and remove information in certain circumstances to ensure accuracy. So this changed the situation insofar as, Companies House, as I said before, there are of course some clever people there, were very much aware that they were filing information which was incorrect, but they didn't have the regulatory power to do anything about it. So, for instance, balance sheets that don't balance, balance sheets that appear to be copied from other balance sheets, various patterns like that, they will now be able to query, reject, and pursue. So again, this puts the fraudsters much more on the back foot. This next point, a little bit more parochial, you might think, but we believe it will benefit the industry and the people who use credit reference agencies. So the government will consider further additional information that it can collect to support the reform measures that are being proposed. It will make more information available to public authorities, and the government is minded to give credit reference agencies access to additional information where appropriate, if the benefits to the UK economy can be demonstrated, and where credit reference agencies can agree the criteria under which they will use such data. So this is a bit of a blank sheet of paper, but the fact that the government is minded to collaborate with the likes of Graydon and everyone else in the industry is very positive from our perspective. It happens to a limited extent at the moment, insofar as some of the information that is filed on directors, such as their home address and their date of birth, is not made available on the public register, but is made available to credit reference agencies under very strict criteria, so that they can do a better job of matching the data and drawing connections between individual registrations. So we very much welcome this measure and look forward to engaging with government as to how that will be taken forward. And one or two other key items just to rattle through. There will also be tighter regulation on companies changing their accounting periods. It's felt that this is another way that fraudsters can muddy the waters and create a false impression of what the company is doing by multiple changes in accounting periods that give extensions to filing requirements. So companies could continually take advantage of filing extensions to avoid having to file their full accounts. There will be a new obligation on bodies that are impacted by anti-money laundering regulations to report discrepancies with Companies House data and information that they hold. Companies House will be given additional powers to query and reject company names, which is another vehicle that can be used by the fraudsters. Certificates of good standing are going to be reviewed, and Companies House will be looking at ways of sharing more information with other government bodies, which again we welcome. And we know this has already started to happen with certain collaborations between Companies House and HMRC. And we would welcome in general government bodies sharing more information amongst them. It removes the opportunity, for instance, for companies to file one set of accounts with Companies House that paint one picture, and then file another set of companies of accounts with HMRC that paint a different picture for their tax purposes. Up to now, there's been no formal way of checking those against one another. I did just want to point out, though, that whilst necessarily this is focusing on the ways that Companies House can be taken advantage of and how it has been used to some extent by the money launderers and the fraudsters, in many ways, Companies House leads the world compared to other company registers around the world. It's unique in terms of its transparency, its efficiency, and when you consider around 400 registries in 200 countries or so around the rest of the world, there is no one standard model for how they operate. The fact that Companies House is so open with its data, is so easy to use, is free to use, are all enormous benefits to the UK economy. And that has formed part of the problem. Because it has been so easy to use, it has been somewhat easy to take advantage of. But in other countries, you might get local registries, you might get one national registry, you might get some registries that are available online, some are offline, some are free, some you have to pay to use, some are public accessible, some you can only access via a registered agent, and the level of data on file you will appreciate varies enormously from country to country. So the UK is at the leading edge of transparency and openness, and I think it's worth bearing that in mind as we focus so much on the things that do need to change about them.
Well, before we go over to
I just skipped a slide. Let me bear with me, Laurie. I'll just moved.
That's right. We have a few questions for you, Nigel.
Let me just. I'm trying to get to a final slide, and I keep skipping it over. But just in conclusion, I would say that we very much welcome the reforms that are proposed. This does, in my experience, reverse the trend that has been going on throughout my lifetime of working in this business. I started in 1984 for a credit reference agency, sending off requests for the company's accounts to be provided on fiche. And since then, I've worked with Companies House data in a number of different respects. And the trend throughout that period has been for less information to become available, with modified accounts, with protections around directors' information, such as date of birth and home address, with unaudited accounts. So this feels like it does reverse something of a trend and start to take the fight back to the fraudsters. So I don't know what's happened to my final slide, but I'll finish there. Laurie, you said you got a couple of questions.
Yes, we have. Yeah, thank you very much indeed for that, Darren. Sorry, Nigel. Right, the first question is, will this report be made public so we can share with colleagues? Some good points have been raised here.
Yes, it is public. It is the 97 report, page report that you mentioned, Laurie, and we can distribute the link to everyone who's on the call, I'm sure.
We'll do that. We have another one here, which is also talks about money laundering. So, Glyn, I'll hold off that question until a little later, and then we can get to Darren and Nigel to answer that one. There's others, I think. Just bear with me a second. There we go. Oh yes, there's one here. So it's all very interesting, Nigel, but when is it going to be implemented?
Yes, that's a good question. It was clearly somewhat delayed by the whole COVID situation, as no one will be surprised to hear. So when the response was published last month, it was obvious that it had been written. It looked like it had been written in the springtime, because it did make some references to consultations that would start in the second half of the year. I think it's up for grabs when it's going to be implemented, but it's clear the process has started, but there don't appear to be any committed dates at the moment.
Okay. And one final question here. Do we know how directors are going to be vetted as being real people? Are Companies House going to use driving license or passport data?
I think that's entirely possible, and I would expect so, but they haven't yet determined how they're going to do this. What they have said is they will engage with the market, so they'll be looking at commercial solutions, but also be looking at building something themselves. So that's all up for grabs. And I imagine that many companies that specialize in providing solutions for ID verification will be looking to engage with Companies House as they do go out to market with this.
Okay, well, thank you very much. It's certainly a really good start, and it'd be great to see as it's implemented and where it leads. So, okay, I'd like to now hand over to Darren Hodder, who's now going to talk to us about London being the centre for money laundering. So,
thank you, Laurie, and thanks for inviting me to speak with everyone today. We have a very interesting topic here, and it's a bit of a loaded question as to whether London is or is not the international centre for money laundering. And that's something that there are many different opinions on. But in order to kind of formulate that overall opinion, I think it's worth giving an overview of how money laundering actually works and how different countries approach money laundering around the world, before looking at a little bit more detail into the controls that we have in the UK. And one of the major reasons that money laundering has been in the press over the last few weeks, in particular, the recent leaks from FinCEN. So we'll take a look at the FinCEN files and then have a bit of a conclusion, and maybe, if we have time, a bit of discussion as to what might happen in the future. So first of all, an overview of money laundering. I always kind of like to think of money laundering as being part of a Venn diagram that very much overlaps with two other highly related topics. That's fraud and cybercrime, and bribery and corruption. So not necessarily all cybercrime results in money laundering, But at the end of the day, if there's a financial gain and some kind of financial transaction, then at some point that money or that gain needs to be laundered to make it look as if it's a genuine transaction and genuinely obtained funds. There's also very close links to bribery and corruption with respect to politically exposed persons and people in positions of power potentially being corrupted. In terms of the process for money laundering, so it is whereby criminals attempt to hide or disguise the origin of any proceeds of any crime. It's often thought about in terms of terrorism and drug trafficking, people trafficking, but it can also be directly as a result of gains from fraud or from tax evasion or because of counterfeit and stolen goods. So any crime that has a financial proceed that needs to be hidden and disguised is done via laundering. And the laundering process has three basic steps. So firstly, there's placing that illegitimate funds within the banking system in some manner. Layering, which is trying to make it hard to trace where that money has come from by utilizing multiple accounts across multiple jurisdictions, multiple types of transaction, in order to try and hide where that money is actually originated from. As you can imagine, because of the different rules and the different level of risk in different countries, by hopping across multiple borders multiple times, it can become quite difficult to actually track and trace where exactly the transactions have originated from. And then integration, and that's taking that illegitimate money and then getting some kind of gain from that in terms of withdrawing out cash that looks clean or buying assets in such a manner that it appears to be clean money or cleanly purchased. So in recent years, there's been a steady increase in the regulation around anti-money laundering. But the anonymous nature of the internet and our lack of sharing information sometimes across borders kind of gives us many challenges in actually preventing money laundering. In terms of money laundering for individual businesses, there are a number of aspects to consider. What is the direct cost as a result of being hit with money laundering? That's potentially losing goods, losing revenue, potentially losing intellectual property, the time that's involved in investigations and in reporting. There are indirect costs in terms of potential reputational damage, loss of goodwill. From a regulatory perspective, there can be quite heavy sanctions and fines and potential compensation that has to be done if you're not actually playing by the rules and following the laws and regulations. And so there's always a balance between all of those costs and the costs of actually implementing the controls themselves, the controls in terms of policies, procedures, hardware and software tools, and the right staff to conduct internal investigations and to produce the relevant reports and recommendations. In terms of what is the actual cost of money laundering, I've just highlighted here a news article that suggests the overall amount of money being laundered internationally corresponds to somewhere between 2 and 5% of global GDP. So that's a figure somewhere between 732 billion euros to 1,832 billion euros. So I'm sure you can appreciate that's a very substantial amount of money. Looking at anti-money laundering around the world, there are a couple of interesting resources that regularly report where the high-risk countries are. Where are the countries where the controls are not strong enough and need to be improved? So the Financial Action Task Force, there's a website link to their regular report there. They have put down as very high risk at the moment, the Democratic People's Republic of Korea and Iran. And that's in terms of those two countries either not participating in anti-money laundering controls or having very, very weak controls that need substantial improvement. Then after that, there's a second layer of countries that are being monitored and being acknowledged as improving their situation, but still have some way to go in terms of managing the level of controls and compliance against those controls. Basel also have an anti-money laundering index where they rank countries in terms of the effectiveness of anti-money laundering controls. And so I've put down there the top 10 at the moment. And as you'll see, there is some overlap between what these two organisations are reporting against. But it's very worth looking and keeping up to date with how things change over time. And this can also help you with your own controls as well if you're dealing with transfer of funds or exports across multiple countries. It's worth bearing in mind where the higher risk may actually lie, and to accommodate that within your overall risk management plans. In terms of banking secrecy, there's another website that lists out those countries that have the highest levels of banking secrecy. And it may be a little bit of a surprise to see that the USA is on there. And I'm going to come back to the USA in a few minutes as well, and why they are so high. But also the United Kingdom falls within the top 12 countries. You'll also see that there's an asterisk against the UK, Guernsey and British Virgin Islands. And that's basically saying that if we were to consider the UK plus all of the British overseas territories or crown dependencies, if they were considered as a single entity, then actually the United Kingdom would definitely be very top of the list there. So we're gradually seeing some changes around that as well, but I think it's fair to say that although the situation is improving with regard to how England, Ireland, Scotland and Wales deal with money laundering, the ties that we have to our crown dependencies means that there's a lot of massive gaps that need to be considered. In terms of the controls that we have in the UK, I've highlighted here a selection of pieces of legislation and regulation. The key ones when it comes to anti-money laundering are in red, but they touch the overall controls for fraud and prevention of money laundering touches many other pieces of legislation, from the Fraud Act in 2006 through to various different acts on policing and serious crime, and even touching into data protection. So it is actually a very complicated picture. To add to this complexity, businesses that are regulated, depending on what type of business you are, will determine what your supervising body is to make sure that you're actually playing by the rules and following the regulations. So if you're a bank or dealing with consumer credit, you'll be regulated by the FCA. If you're an accountant, you may be regulated by the ICAEW, and so on. And in fact, there are actually over 15 different supervisory bodies according to which sector you're actually working in. And this complexity has led to a relatively recent development whereby it's recognised that these different supervisory bodies are not necessarily giving a consistent approach to supervising and ensuring that the controls are being implemented in a uniform manner across all of these different sectors. And so now there is, in effect, a supervisory body of the supervisory bodies, the Office for Professional Body Anti-Money Laundering Supervision. So I think the overall picture here in the UK is more confusing than what it necessarily needs to be. There are also many businesses that currently do not fall under the regulations. And so a lot of businesses think, well, why should I care about money laundering or prevention of money laundering? And in reality, what we're seeing is over time, as the regulations change, more and more sectors are being pulled in from formerly being not supervised to actually being supervised. The law itself says that prevention of money laundering is applicable to all companies, not just those that are currently supervised. So if you are actually facilitating money laundering in some manner, that doesn't mean that you can't be caught out at some point or implicated in an investigation or in a case. If you're not a supervised organisation, then you have no obligation to designate a money laundering reporting officer, but you can elect to have one in order to delegate accountability from the CEO or from board level executives. So for regulated businesses, there's always a money laundering reporting officer that is designated, and they are responsible for ensuring that adequate systems and controls are in place to identify and manage money laundering risk, to make sure that the right procedures are in place and that there's regular review of those policies, procedures and controls. And a key element here is that the core offences involving the transfer of funds and associated with potential crime and money laundering, those are not committed by supervised entities, provided that suspicious activities are reported to the NCA, the National Crime Agency. And these are what are known as SARS, so Suspicious Activity Reports. So this is just a screenshot from the National Crime Agency website. If you are a regulated business, a supervised business, you already will be familiar with the website and how to submit electronically suspicious activity reports. But you can also still register as a non-regulated entity if you ever have any suspicion, and you can still make reports. So you can look at how to do that, and there's full information on how to do that within that website. So in terms of the current situation in the UK, in terms of the volume of suspicious activity reports that are submitted, in 2019, the private sector submitted in excess of 475,000 suspicious activity reports. And as you can imagine, that means that there is a hell of a lot of activity that is going on there, and therefore it's never the case that the law enforcement agencies will ever have enough resource to actually fully investigate and conclude every single one of those cases. 475,000 annually would require a huge amount of resources that is just not feasible. The Met Police alone get handed 12,000 suspicious activity reports to investigate every month. There is a centralised database that is retained, and that database currently has approaching 2.4 million SARS. So the law enforcement agencies have the ability to look at trends that are happening over a period of time in order to identify where there is a very high level of criminality and where to try and chase and follow that money and get convictions. Year on year, the number of SARS being reported are increasing typically by 20% annually. It's fair to say that companies are becoming more aware and alive to financial crime within their business. This is also taken from the annual report that breaks down how SARS are being reported across different sectors. So we can see that the majority of suspicious activity reports are coming quite naturally from banks, building societies and credit institutions. But there are a number of other sectors that are regularly and increasingly giving suspicious activity reports, particularly, for example, within the legal profession. That's been one area that's been a target and has been recognised in the past as being slightly weak on providing reports. So that seems to be turning around slowly now as well. But also you can see it as well within money service businesses and gaming. And this leads me on to the FinCEN files. And you've probably seen mention of this in the press quite often particularly over the last month. But for those that aren't familiar with it, I just wanted to give an overview of the FinCEN files. So in essence, FinCEN is the US equivalent investigation agency or financial crimes enforcement agency that's comparable to the UK's National Crime Agency. And that's where SARs are sent whenever US money or US dollar transactions are involved. And so there's been a significant leak of these reports. And as I'm sure you can appreciate, these reports are supposed to be highly sensitive and kept very much under lock and key and for eyes for specific people only. But there was a leak of the SARs collected by FinCEN. This leak covers reports dating from 2000 to 2017. The leak was not the entire set of SARs, it was just a small percentage. But what's happened out of that is a lot of analysis has been undertaken by investigative reporters, and they found that the UK was highly prevalent within those files. So as Nigel mentioned earlier, one of the issues that we've had with Companies House are those shell companies, multiple companies registered to a common address, where that common address is often just a drop address, where there's actually no activity really occurring. And again, issues around fake accounting, multiple accounts across different companies with precisely the same figures. And there's a lot of connectivity as well that's been seen between London and Russia. And so you'll see in some of the reports that it's been stated that London is awash with Russian cash. What's worth bearing in mind when it comes to these files is that they do date over quite a period of time. And so it's been put across quite negatively in the press that that we are not doing enough. But in reality, the controls for specific reports that have happened in the past were not as strong as they are now. And so this timeline here kind of gives a little view there as to how the controls and the regulations are tightening over a period of time. And this will continue to go on as well into the future as well. So we see from 1968, the original Theft Act, which ultimately got replaced by the Fraud Act further down the line, through to the various different revisions of the money laundering regulations that bring us up to date presently with the money laundering and terrorist financing regulations of 2019, which is actually an amendment to a whole set of previous laws and regulations that brings the UK in line with the EU's fifth money laundering set of requirements, set of directives. This will then develop in the future into the sixth iteration as well. What's been very clear from the FinCEN files that there are a number of reforms that really need to happen, not just in the UK, but internationally. There are too many incidents at the moment where banks and bankers are not getting away with the crime, but simply being given DPAs, deferred prosecution agreements, whereby they pay a very large fine and agree to improve their systems. But at the end of the day, that ends up being seen by the banks as being a cost of business rather than an incentive to do the right thing. And so Sharon has just said in the chat here, the controls are only as strong as the organisation that implements them, which I absolutely agree with. And there's also a lot of issues around how money laundering is viewed by the board and how it's sometimes swept under the rug. There is definitely a need to tighten suspicious transaction reporting requirements. Quite often, the money laundering reporting officer may have to, within their own organisation, request information from various different departments, from various different people that hold the actual information that is needed to really give a good and detailed suspicious activity report. And sometimes even internally, that information is not forthcoming, or the compliance officer doesn't have sufficient access to the right tools and the right data sets. The compliance officers as well have insufficient power to actually prevent money laundering from occurring. They will often be able to make recommendations to the board to say, here are some suspicious accounts and people, but they won't actually have the power to say, I'm forcing these accounts to close. And so that needs to change as well. I mentioned the US earlier as being very high on the list of banking secrecy. And the reason for that is that the laws in each state are very different in terms of what you need to do to register a company. And there are a number of states, Delaware included, a couple of others as well, where it's incredibly easy to anonymously open a business and register a business. There are a number of loopholes in the UK which are gradually being plugged. So in particular at the moment around Companies House, and that work to start to reform Companies House started before the FinCEN files got published, but it brought to light the urgency to actually do that, and I think it gave the impetus for us to actually get on with it. And then finally, consistency in Europe. So although there are directives across the 27 European states, each country is actually implementing those directives in a subtly different way, and there is not sufficient overarching control and supervision of that. So there are a number of things that the FinCEN files have definitely brought to light. As a result of the FinCEN files, there are some actions that are being undertaken right now. So FinCEN themselves have recognised that they need to do some reform in the way that they operate and the way that they collect and collate data and share information. We've covered already Companies House reform. There have been direct questions that the Treasury Committee have asked of HMRC, the FCA, and various other departments on the quality of our own approach as a result of what's come to light from the FinCEN papers. And finally, a piece of good news, although I don't have a timeline for it right now. One of our Crown dependencies, the British Virgin Islands, has said that they will now introduce a public register of company owners. So that's one area of secrecy that will hopefully be resolved over the next year or so. Some resources for anyone that's interested in understanding and looking in more detail at the FinCEN files. Obviously, we're on quite a short session today. There is a really good episode of Panorama, which will be viewable for a few more months to anybody based in the UK. If you're not in the UK, there is still very good coverage that the BBC have provided, which is on the BBC News website. The actual investigation from the ICIJ is a really good resource to look at what's happened globally as a result of the FinCEN files, and this is very much an ongoing picture as well. And there's been some good stories and good quotes that have come out on Compliance Week as well. So I haven't quite answered the question, is London the international centre? I would say that there are definitely problems, but there are also definitely actions that are being undertaken to make London a safer place. But I actually wanted to throw the question back to everyone here. In fact, if Laurie, if you could help me with the questionnaire. I can't see what the questionnaire is.
Hopefully Claire in the background can help. Not coming up.
Ooh.
Our polling seems to have disappeared.
Okay, well, we was going to do a quick poll, but maybe we can do that in the feedback, and you can feedback to us whether you believe London is the centre or not. I suspect that the answer is probably going to be yes, but I like to take a view from both sides. There are definitely issues. There are definitely things that could be improved, but there are things that we're doing correctly as well. And that's actually something that isn't highlighted enough within the files that have been leaked. What it does demonstrate is the banks are actually following the rules and making these reports. I think a lot of the issues are down to resources within law enforcement in terms of following those up, and the attitude from the very top in terms of not necessarily always closing down the accounts once they've been identified. And using the SARS system as an excuse to say, well, we've alerted it and that's all we need to do. That's my view. That's my personal view anyway. I just have my contact details, which will hopefully come up. I've lost control here now. Oh, there we are. So that's a very quick whistle-stop tour. I think we might have a few minutes for a few questions.
We have a few questions actually, Darren. So thank you very much as a starter. Let's go through these questions. So the first one from Glyn Stableford: how useful does the panel consider OSINT solutions for clear, grey and dark web investigations in the battle to pursue the perpetrators of fraud and money laundering?
Okay, so for anyone that's not familiar with OSINT, that's open source intelligence. There are a number of really good solution providers out there now that collate a lot of information from multiple disparate sources. And that can be very good to use when you're doing your due diligence, when you're originally starting to have a relationship with a new account, be it an individual or a company. It can highlight where there are potential past data leaks that may bring into question the security of information and data that's being held by third parties. It can identify where there's been negative press or where there's been some level of chatter within the dark web as to whether an organization has or is about to be targeted. There are multiple solutions out there, so I wouldn't want to name anyone in particular, but we can actually potentially take a deeper look at that in a future session if it's of interest.
Okay.
We understand that Graydon it's only about 4% of all the information that's on the web is actually indexed by the search engines. So the OSINT investigation processes will get you into the deep web and the dark web and all of that data that's not indexed, but is available if you know how to get at it. So we have started to launch what we call our forensic investigation service that delve into that information for people who want to go that bit further.
Okay, thank you, Nigel. Nicholas Ashton has said cash is king. and so is the unique identification number on every single currency note. The USA uses within law enforcement software that documents electronically all drug buy notes, which then are tracked by all officers. Why are we not recording all the deposited notes through money counting software and repositories, presumably in the UK? That's a question and a half.
My answer to that is I think we should be. It's very much the case that we now have that technology and the ability to do that, whereas, say, 10, 15 years ago, we just wouldn't be able to technologically keep up with that volume of data. Imagine the hundreds and thousands upon thousands of notes that get scanned and collated. I don't know where the UK banking system is with regards to this. I know that Nicholas, you're doing some very good work in raising the awareness of this capability, and I would hope that over time that would be taken on board and we would start to do that.
Good, and I think the final question we've got here is from Roscoe Adams. Where can we find updated regulations and compliances for payment processors, or rather regulations that are in the early stages of becoming a regulation over a period of time?
Okay, so there are some really good resources out there when it comes to anti-money laundering as a whole across all different sectors. There's the Joint Money Laundering Steering Group, and they publish some very good guidance that's recognised by the supervisory bodies. So that's one place to go and look. There are also a number of courses out there, and in fact we provide training and awareness on how to comply with regulations, how to put into place the relevant policies and procedures and controls. But you can also get professional qualifications as well through the likes of ACAMS, which is like an industry body association, a bit like the ACFE, but for money laundering. So you can actually get a known qualification. And I would say there are also some other very good working groups that cut across what Laurie does with some of these other forums. But also there are some other really good forums that are out there that we collaborate with that will regularly meet and disseminate information, particularly around the payments piece, the payments processes. Vendorcom is quite a good source of regular information and meetings and discussion and debate around how regulations are evolving.
Right, well, thank you very much indeed, Darren, and thank you very much indeed, Nigel. If we can get the next slide up. Just a very, very quick couple of slides on Forums International. If those of you who don't know us, we've been running forums, or Forums International was formed in 2015, but in fact we've been running forums since 1991. They're mainly for credit and finance professionals. We run, it says 8 throughout the year, and in fact that number is actually going up to 10. We have a couple of new ones coming very shortly. So probably find this very, very difficult to read. I think we need a bigger slide for this, but just to give you a little idea of some of the things that are coming up shortly, we have the next FPN meeting, which is important, is on the 3rd of December. We have on the 11th of November, anybody that's dealing with Amazon, supplying to Amazon, we have an Amazon forum. This is Amazon 2. We did another one back in 2018, which was very, very useful for suppliers. And we've got a couple of new forums coming up for media and publishing, and also for pharmaceuticals. So quite a packed couple of months coming up before we reach Christmas. So thank you. So just to say thank you very much to everybody. Sorry, we can go on to the next slide, it'll be fine. If you want to get some more information on the forums and our events, please go to the Forums International website. We will write to you all anyway and send you the details of the Company House report, the link to that. And if you would like to have a copy of the recording or copy of the slides, let us know and we'll be happy to forward those on to you. Next FPM meeting is on the 3rd of December. It's a virtual meeting. It runs from 10 o'clock to 1 o'clock. If you'd like to have an invite to that, attending it is free for your first time round. So you'd be very, very welcome. So just let us know and we'll make sure you get an invite. And hopefully there's another part to that slide. So there we go. So we can say on behalf of Darren and Nigel and myself, keep safe, keep well, and hopefully we'll see you again sometime in the very near future.